Greetings everybody. Let's have a look at Euro USD, and I'm on the monthly chart as you guys can see. And in regards to this particular chart, we can see that we had this very nice M structure over here, which had a neckline more or less at that point. And you guys can see that price broke to the bottom side of that neckline and then went back to the neckline to test it. So at this point over here is where we should be looking for potential selling opportunities, and I believe that our take profit should be this level over here, where we have that bearish candlestick, right? Let me just add a neckline to that structure. Just bear with me guys while I do so. Here we go. More or less we could say that this is the neckline of our M structure. Another thing that I'm going to do guys is to utilize the Fibonacci retracement tool just to see if this neckline of this M structure aligns with any key numbers that we have on the tool. Let's see, Fibonacci. There we go, more or less. Let's see. Right, so there goes our Fib tool, and we can see that more or less the neckline, which is over here, of this very nice M structure aligns with, we could say, the 50% Fibonacci retracement level, and there is confluence in as far as looking for potential selling opportunities goes. And that is because guys, you know by now that whenever it comes to M structures, we want to see price breaking to the bottom side of that neckline, heading back up to the neckline to test it, and at this point is where we would look for potential selling opportunities. Now that our neckline aligns with the 50% Fibonacci retracement level, there is confluence in as far as looking for potential selling opportunities goes. However, having said that, we're not just gonna sell just by virtue of having a Fib number of 50% as well as price seemingly rejecting at the 50%, or rather at the neckline of this particular M structure, right? Anyway, let's proceed guys. So what else do we see on this chart that we should be paying attention to? I don't see much, so I'm just gonna head down to the weekly chart, and here we are on the weekly chart. Let's have a look. Let's just zoom in a bit. Let's have a look. What do we see on the weekly chart that we should be paying attention to? Another thing that I see on this particular chart is the fact that we have this candlestick over here. It is a bullish candlestick with a small body and quite a long upper wick, and it tells me that at the top where that candlestick ends, there's a lot of liquidity at that point. And as much as at this point in time it seems as if the market is about to give us a nice reversal, what may actually happen as well is that price may head up to trigger all of that liquidity and then only push further down. So just keep that in the back of your mind as we proceed. But for now I'm just gonna mark that area because it's very important, right? And not only is this candlestick, or rather this area where we have that candlestick, a liquidity area, it's also a very strong level of resistance, as you guys can see, and that is because we've had multiple rejections at that point. Can you guys see that, right? Anyway, let's proceed. Another thing that I see guys is that we have this candlestick over here. It is very much similar to this one in that it too is carrying a lot of liquidity at the bottom. It is actually a bearish candlestick with a small body and quite a long lower wick. We have another one at this point as well, right, more or less, and what that tells us is that there's plenty of scope actually for the market to move further down, because there's a lot of money trapped here as well as at this point over here, right? So what else do we see guys? At this point I don't see much. I'm just gonna head down to the daily chart. Let's have a look. And just to recap a bit guys, remember that this level over here is the neckline of that huge M structure that we spoke about on the monthly chart. Remember that? And we said that the neckline aligns with the 50% Fibonacci retracement level, right? Just keep that in the back of your mind. We also spoke about this level over here, and we said that there's a lot of money sitting here, as we have a liquidity candlestick sitting around this point also, right? Anyway, I'm just going to zoom in. Let's see. The next thing that I'm going to do guys is to add my daily channel. Let's see, how would I add my daily channel? Let's have a look. I would add it in this manner more or less. Just bear with me guys, bear with me. There we go. Right, so we could say that that's our daily channel. And then I'm just going to zoom in a bit, and let's see what do we see, guys, on the daily chart that we should be paying attention to. Let's see. Another thing that I can see is that we had a very nice overextended M structure at that point. It's an overextended M structure because that first leg is lower than that second leg, as you guys can see, and it has a neckline at that point, guys, right? And you guys know by now that whenever we have M formations, just like with W formations, we want to see price break into the bottom side of that neckline, hitting back up, and at this particular point is where we would look for potential selling opportunities, right? So should price from where it is head back to the neckline, which is, let's say, over here more or less, right? Let me just actually zoom in, guys, so you guys can see exactly what it is that I'm referring to. So I'm referring to this M structure over here, right, which has a neckline more or less at that point, and we can see that the neckline has been broken to the bottom side. And as I said, guys, ideally we want to see price heading back to the neckline to test it, and at this point is where we should be looking for potential selling opportunities, guys. We should be looking for potential selling opportunities. Another thing that confirms that indeed we should be selling should price comes to this point is the fact that we have this opposing trend line, which has been broken to the bottom side as well. So that's confluence. Number one, we have price, as I said, guys. In fact, before we continue, let me just add a neckline to that smaller M structure. We could say that more or less this is the neckline of that smaller M structure, right? Just to recap, guys, remember we have this M structure which has a neckline at that point, right? To add to that, we see that the market has broken the bottom side of that neckline. It has also broken this opposing channel, right? And that is confluence in as far as looking for potential selling opportunities goes. However, we would love to see price come back to this area to test it, and if it does so at this point, as I said, is where we would look for potential selling opportunities. We're not just going to sell, we're going to look for further reasons for why we should be potentially selling at this point over here. Another thing that I see, guys, that is also very much interesting, and that points to that we may potentially see a reversal of sorts, is the fact that we have this candlestick over here. It is a bullish candlestick with a small body and quite a long upper wick, and it tells us as well that where we have that wick at the top, there's a lot of liquidity sitting there, and by now we all know that liquidity is actually money that needs to be triggered by the market at one point or another. And we can see that where this red line is actually more or less where the neckline is, right? So as I said, guys, should price from where it is come back to this level, at this level is where we should be looking for potential selling opportunities. We're not just going to sell, we're going to look for further reasons for why we should be selling, right? Anyway, let's proceed. So what else do we see, guys? At this point I don't see much. I'm just going to head down to the H4 chart. Just bear with me, guys. Let's see. And here we are on the H4 chart. On the H4 chart, I'm just going to fix my channel somewhat. Just bear with me. Let's see, more or less. There we go, right? And remember, guys, just to recap, on the daily chart we spoke about how we have this very nice M structure. It's actually an overextended M structure, and that is because, as I said, guys, that first leg is lower than that second leg, right? And we also spoke about the fact that it has a neckline at this point, and we can see that the neckline has been broken to the bottom side, right? But now that we are on the H4 chart, right, can you guys see that actually, right, price after breaking to the bottom side of the neckline actually went back up to test it, and actually we should have looked for potential selling opportunities at this point, right? However, based on the daily chart, we know that the neckline is yet to be broken, and should price come back again to this area over here, at this point we may potentially look for selling opportunities, right? However, we just need to be careful, guys, because as much as we have this M structure with a neckline at that point, should price from where it is revert to the upside, bear in mind that we would also be having an opposing W structure, which would also has a neckline at that point, which would mean that selling actually, now that we have analyzed further, at this point would be very risky, and that is because, guys, we would be having two opposing structures. Number one, we would be having the M structure, and number two, we would be having that W structure, right? Let me just draw it properly, the W structure, and they both have necklines more or less in the same area, right? So what this means is that buying or selling in this area is risky, because the market may go in either direction. It's just too risky, right? So it may happen that your price come back to this level over here, which is the neckline of this M structure. We may actually take a pass and not actually buy or sell, and that is because, as I said, we have two opposing structures, as you guys can see. Number one, we have this M structure with a neckline at that point. Number two, we have this W structure, which would also have a neckline more or less at that point, right? However, having said all that, if you feel that you want to take a risk, it's all on you. I think that you should go ahead if you feel that you want to take that risk, right? Anyway, what else do we see, guys, now that we are on the H4 chart? At this point, I don't see much, but we can see that currently the market is at a very strong level of support, guys. As I said, the market is at a very strong level of support. And just to add to everything that I've said, guys, as much as I said that the market may be in the process of creating a W structure, just also keep in mind that we have, if you look closely, a head and shoulders pattern at this point, right, which has a neckline at that point, right? So it may also happen that when the market opens on Sunday, Monday, at this point, we might see price head back to the neckline to test it, and at this point we would look for potential further selling opportunities. We would look for potential selling opportunities. And remember that also head and shoulders patterns, right, are very much similar to M structures, right? The very same principles apply. The only difference is that actually if you cross this leg over here, you will still have an M structure over here, and it would have a neckline at that point. I hope you guys can see that. Right? So the very same principles apply, right? I'm just gonna add a neckline to that structure. Just bear with me, guys. There we go, more or less. There we go, right? So in other words, and in conclusion, guys, should price from where it is come back to this level, at this level is where we should look for potential selling opportunities, right? To add to that, because we have that other M structure, should price come back again to this area over here, especially for those of you who love risk, at this point is where you should be looking for potential selling opportunities again. However, having said that, bear in mind that we have another opposing neckline at that point of this W structure, and it would be a very strong level of support. So just bear that in the back of your mind, right? Anyway, that is it as far as my analysis goes. But myself personally, I would love to see price come back to this area, and at this point is where I would love to see the market push further down, right? That's my analysis, and peace out.